Hello, 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 everyone. Happy Monday morning. Retest of last week's lows. How is everyone doing? Let's see who's here. Good morning, Davey. Good morning, Patrick. Magma Monday. Why is it Magma Monday, George? You don't need my help. Chris, you got this down. Good morning, Anissa. Barely made it, but you did made it. You were running down the hall, squeaking in before the door closed, Sterling. Good morning, Gary. Hope everyone had a wonderful weekend. Off to kick the week off. Remember Fed Day Wednesday. Could see some interesting trading before then. Good morning, Andrea. All right, today in terms of financial releases, this 9 a.m. Central, there's only the housing market index. That's it. So there's nothing that's really going to move the market there. I mean, that's important, but it's housing's already been discounted in the overall scheme of things. Pretty red morning pullback in crude. I think it's going to retest these lows and probably break them unless we get some more chatter coming out or OPEC chatter or strategic reserve chatter. Other than that, that is still down. But remember, the energy sector is still positive. You just got to be picky on the plays. 80-20 favoring the 75 basis point hike. I'm just going with that's baked in for Wednesday. And by the way, we are still in negative gamma territory after this last OPEX. So we still have negative gamma, which can amplify the moves both up and down. AutoZone this morning, I've been way too busy to even check, and it will be peaking at that after the live stream. So far, let's see, because lava's going to flow. What is going to flow? I don't understand. Because red is going to flow. By the way, I can't get overly bearish. I can get tactically bearish, but I can't get overly bearish for the next couple days. I can get short-term bearish. I can't get aggressively bearish. Why can't I get aggressively bearish? It was an major, we'll call it a accumulation zone before the last big run-up in this area. We have multiple stopping points. I can't really get, until we get below about 3,800, can't really start jumping on the super bearish bandwagon to retest the lows back from June. Now, we did close below 62.5, so we should hit that 87.5, but we have a lot of stop points. That doesn't mean I wouldn't be surprised if the sell-off continues that we retest the 3,800 area, possibly just above that. But again, that would be tactically bearish, not severely bearish, with cycles potentially at the bottom. Now, they can stay at the bottom. Remember, though, they can do a little hiccup move like in this last sell-off, and they can also, remember, get pinned at the top. They can also get pinned at the top and do a hiccup move. Oops, sorry about that. So, now we start really breaking below 3,800. I think that the June lows are clearly in sight. By the way, that 1 hour double, I've already taken it off, was stopped. I gave that levels yesterday. Now we do have it rolled into a 4 hour double. The only thing that can get me short-term bullish, and what's interesting is the peak of that is that same peak for the potential buy pattern on the daily I talked about a lot yesterday. I don't need to go back over it. It would be a break above Friday's highs. Intraday with then it rolled into a close above Friday's highs. So the double bottom, I should call it a potential double bottom because it hasn't been confirmed yet, coming in at 39.0350 is the same as the trigger for the other buy. Does that mean the probabilities go up? No, because neither of them could trigger. That's the only thing that really takes me into at all bullish mode. Yes, there is a clear path move from overnight heading up. My key target, if we do break up on the open, is about 38.75, then 38.83, then roughly, I got to bump this up just a bit. Then we're at about 38.93. Those are all my targets. So downside, we came and hit the next harmonic. If we do break below the 5 a.m. Central Time lows, my next target is 38.39, 38.28, and then major target area is 38.11 to 38.13 to the downside. Other than that, it's going off everything tactical. Very short term. If you're not a short term trader, I would more recommend waiting for some of those 4-hour or daily signals, or just sit on your hands till after the Fed meeting. Good morning, Rams of Fall. Let's see. NASDAQ. Again, that 1 hour double that was triggered on the Friday close with the quad witching off the table, rolling into a 4-hour double. 11,960.75 is the closing price. That's the only thing, and I already talked about the potential bullish trade. Not going to rehash that. My next targets on a rollover trade going into the open would be 11,736, then 11 about 695 to about 11.7 to the downside. And that would be the 75. I'm still expecting this also to eventually retest the June lows, but we got a lot of support on here. Then 11,694, 11,736, 11,781. Also, you have the accumulation phase before from this little ascending triangle before the last breakout. Can't get aggressively, super aggressively bearish till about up below 11,500. All right, so that's where I sit there. Same daily buy pattern set up, the same. Now we have that new 4-hour buy. Other than that, it's just the short-term trades. You're into a little advanced clear path. You got a pausing area. We're sitting right at the resistance area, and then you got another pause area. This is why it's going to be interesting, even to the upside. It's a fair amount of stopping points. Targets 11,855, 11,880, 11,921 area. We refine that 11,927 area. Dow, same pattern. Above 31.12, 31.200, 31.294. I'd be focused on those two targets, by the way, not the 31.388. Next target, if we do break below the 5 a.m. lows, we're looking right around 30,522 to 30,500. And then, let me reverse these again. Back to where they were. And then we have 30,215. Now, the Dow is, I can get more aggressive to the downside because we're getting to the bottom of this key support area, especially about 30,500. Yeah, we got some wicks down here, but then we go into another clear path move, and I could get more aggressive down to this about 30,215 area. Gary's sitting on cash. Boring. Sometimes boring saves your cash, though. There's nothing wrong with being bored in a market like this, especially if you only really trade on the long side. There's nothing wrong with that. Cash is king. Yes, you're taking a hit with inflation, but you're not taking a hit in the broad market. Now, if you're sitting on a lot of cash, I would really, especially after this Fed rate hike, start looking and parking it in some short-term bills. Okay? You got decent rates on short-term bills. You can do 13-week bills. They're going to be paying decently. So if you want to do something with your cash, you think, hey, I got to keep. You can always keep something liquid if there's great buy opportunities, but you can put something in these shorter term bills, and then if there's no great long-term buy setups, if we don't have any long-term buy signals, keep rolling it forward. At least you're earning a halfway decent rate of return. No, will it offset inflation? No, it will not in the short term, but the short term keeps your money relatively liquid, and you get a better rate of return rather than parking it in just a standard brokerage account and or in savings, okay? And it's more liquid than CDs because you can do 13-week. I think about that. And you don't have state and local taxes on it. You still only have federal taxes. They're not giving you financial advice. Something you might want to talk, if you have a financial planner, talk to them about, or investigate it on your own. But that is something to consider. Why do I say that? By the way, just the 10 years went to a new recent, since I'm talking about things bond and note related, they spiked up earlier, taking out the June highs, getting some selling pressure. But if you look here, even the 3 months, you're looking at 3.197 based off the yield. All right, what's that? That's the roughly that is the 13-week. So if you'd like to grab something along those, and that's going to go up on the next Fed rate hike again. So wait till after Wednesday for the next short-term auction. Might be an alternative. Other things I'm looking at, I talked yesterday about Intel for building a longer-term position with a fundamentally stock that's not going anywhere, has been severely beat up, has a decent dividend yield of close to 5%. So you can look at other things like that that have good fundamentals that you're willing to build a long-term position in, not trying to grab a short-term bottom. All right, this is what? There's options to put your money into that are, I mean, unless our federal government's going to go bankrupt in the next little short term, you're going to get your money back. I'd rather get money back than no money back or try to buy falling knives. If we break below today's lows in the, again, I'm sitting on my hands with, besides the short side would be to 113.24 and a half. Below there, if we really start tanking, it would be back down to 112.12. But this is getting interesting going into the Fed meeting. So not aggressive on the notes. Dollar index. Wanted to touch on this real quick. Sorry, I got sidetracked from trading, but I think other people need to focus on what's going on with some cash and where to possibly look into investment opportunities for the short term. This is now a triple top that it can still be traded as a horizontal channel breakdown, or a horizontal channel breakout. However, your targets are different. I'd be watching this above about 109.80 and the breakdown levels right around 109.20. Those are the two key things I'm watching for, other than it had that massive ramp up day on the 13th, and so far this is a sideways correction with the daily rotation zone. So this favors a new break to the highs, and my next target area would be 110.39 and a half. The VIX, of course, with the retest low, gapping up this morning. Won't start getting into super bearish until we take out the highs from the 16th, then 28.89 to 29.18, and major areas 29.88. Can't get more bullish until we start getting below 28.87, and I'm talking aggressively more bullish. Crude. Retest now. Yes, this is a potential 4-hour double bottom. Potential. I'm easily expecting this now with this downward pressure to retest at 80, you know, that number they were talking about with the SPR. But let's just see also I'm still targeting this first since that SPR target probably off the table. And look, you got short-term harmonics. We got the big weekly double target and a short-term harmonic. So that's the overall is that 77 area on a breakdown. That's the real key thing. The only thing that would get me in the shorter term bullish would be, at this point, would be the trigger of the double. By the way, natural gas, keep an eye on that. It did confirm this massive double top. It was down there earlier, but some buying pressure stepping in, so not yet triggered. What else do I want to touch in? Euro also in sort of consolidation, still expecting this to retest the 99.20 area. We don't have a great bottoming pattern just yet. Bitcoin getting the old smackdown, retest at 87.5. I am still expecting it might take the next pop up in the markets because we will get a corrective pop in that too, but I'm expecting this to take down the 17.5 area and then 16,631 to 15,700. So any rallies are, from my perspective, are to be sold. Tesla, yes, you still have this potential double you'd need. Shorter term, it'd be a break below about 290.40. It needs to trigger on a daily basis for me, so that's the key levels. That's about it. Other than that, it would be the gap play off the open. And then I know we had AutoZone. Sterling put it in here, and I love AutoZone. There's just not this is a double. So I'm going to be watching for that to trigger. 220.217, it has to trigger on a daily basis. It can be traded intraday on a break, but it has to close above there for a hold. And you do have the gap to the upside. Thank you for putting that in. But I need that to trigger on the upside since now it's swimming against the market. Now, if it does trigger, interesting enough, is you have a gap play, and I'd really focus on the first and second levels in this. Anything above that is gravy, but that's an interesting play. Now, if it does not trigger, we could get the overall roll down for the gap fill if that doesn't trigger. So that's why I just wouldn't be aggressive buying before it triggered. But that is a play for AutoZone. The stop levels, and I'd use the conservative targets. It would be on a trade once it's triggered, a close below 2152.49 or a trade below 2138.55 would invalidate it, and that's the conservative stops. You could always use more aggressive stops. There you go. I've got your harmonics anchored to the June 13th high on the weekly chart of the VIX, which has us trading between the 50 and 62.5 for retracement. Is that where it should be anchored? No, you can leave it because that was a very key level. So if you're looking at stuff longer term, you're going to play this key bottom to this key bottom. Or you could still be trading. It's going to give you an area if you want to still do the recent run-up moves. The area I'd be watching is essentially now we have the harmonic cluster, but to really start getting into more longer-term bearish mode, it's got to start getting that closes above 29.84 area. That's the longer term. I was trying to cover the short term here. Again, if you're saying stuff like buy on the 200, I need to know what. Are you talking about AutoZone? You got to put a stock symbol in because I don't get these comments until after I might be done discussing something. Hey, Tom, is Jay Powell gonna stop after or before this one? Is this what's your take on this one, huh, Tom? What's Jay Powell gonna do on Wednesday? Well, it's not just Jay Powell. It's what's the Fed gonna do? It's not just that Jay Powell decides. Well, that's the key thing. Manage risk. Good morning, Lauren. So, if you're tuning in late and want to know some thoughts about parking cash, go back and watch the replay. Other than that, not much going on. No, I'm not. I'm in the process of setting it up, and I'm using it to run some tests right now. It takes a while to convert over a streaming rig, and I'm using it to run some tests. Because it's more powerful than anything else I have right now. So it is good for running systematic tests on it. I don't disagree with that statement. However, inflation's still high. You didn't answer my question. What's he going to do? He pause after, or are they pausing going into this meeting or after? What do they do in this meeting, Tom? And then they pausing for the rest of the year? Which you're pretty much in la-la land. Smash the like button. I agree. That's where we sit. So, short term, I mean really short term, if you don't have anything great to do, I would really advise sitting on the hands. And look for these setups going for the longer term stuff. All right, he will pause after this Fed meeting while you're in the distinct minority. And he will print $120 billion a month back. Now you're in complete la-la land. So he's going to unwind quantitative tightening. He's going back to QE and he's going to pause. Well, yes, the market would go to new highs very rapidly if that happened, and inflation would go back through the roof. Inflation would not be contained. You'd be loosening financial conditions to such an extent that inflation would actually start getting out of control from my perspective. So that would be crushing the economy long term, because we could actually start spiraling into an inflation spiral that's uncontrollable, which would crush the average person. And then unless the government's just going to print money and hand it out, which then would be hyperinflation, you'd be in a worse position than we are now. There we go. There's my little take on that. I got 3 minutes to the open. Inflation's bad. It's not out of control. Out of control is when it starts aggressively feeding on itself. Well, if we start seeing like a 1% rise month over month consistently, and it starts ramping up, then it is out of control, and then you're going to have to do draconian measures to rein it in. Right now, it's horribly bad. Out of control is where it just starts to spiral feed on yourself, where people are just, hey, money comes in, I'm going to just buy whatever I can because next month it's going to be a lot more expensive. And that's where you want to own stocks, because everything you'll eventually devalue the market. But in the short term, everything will pretty much start going up, because there'll be a scramble to buy everything because, hey, it's going to be more expensive next month. You're welcome, Ramsafal. I agree. Services are sticky. It's why they need a recession. I talked about that last week. All right. Sell side across the board with light volumes, 150 million. Market on open at 9:15. Okay. Thank you for that information. That's 9:15 Eastern time, by the way. Since I do everything in Central here, but I know people are all different time zones. Why do I do it in Central? Because that's where the CME, and we cover futures first. All right. Again, if you don't have anything, just trade safe. Don't throw money at stuff that's not worthwhile. And I will talk to everyone after the close. Bye.